Hi friends, welcome to Konexio Technical Insight. I'm Rahul Randeria and I would be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns on Nifty, Bank Nifty, as well as on the different asset classes. Now, first of all, let us discuss what we have mentioned in our last video. In our last video, we have mentioned that the setup was oversold. We might see market consolidating at these levels, and we have a heading of the on the thumbnail also, that is market consolidating before the union budget. We had a view that market might remain in the range of 17,700 on the downside and 18,300 on the upside. So last week Nifty opened on a positive note for 2 days. Monday and Tuesday it traded with positive bias. It tested the high of 18,265, and from Wednesday, Thursday, and Friday, 3 days of the week, Nifty ended on a negative note and tested the levels of 17,800. So most probably, almost Nifty, we could say that performed on our expected line, that Nifty traded in that particular mentioned range. So now let us go to the daily charts and we'll try to figure out what could be the trend for the next week. First of all, before discussing our markets, let me discuss the Dow Jones, how it has performed throughout the week and how it has ended on Friday. So now this is the Dow Jones daily charts. You can see Dow Jones has ended on a positive note, but prior to this positive close on Friday, it has almost consolidated for 10 to 12 trading sessions, and then it has given a breakout on the upside. Now after this long congestion, when Dow Jones has given a breakout on the upside, and RSI also, you can see it has remained flat throughout the 2 weeks, and then it has given a positive crossover. So this is just indicating that market might revive or start bouncing from these levels, but we need to see how our domestic markets should behave from Friday onwards. So positive trade or positive closing in Dow Jones is clearly indicating that we might see Nifty or Sensex or Bank Nifty bouncing from these lower levels. So we need to be cautious, but at the same time we should remain slightly bullish from the lower levels. So now let us go to the Nifty daily charts and we'll try to figure out what could be the trend of the week. Now this is the Nifty daily charts. Now you can see here, Monday and Tuesday it traded positively, and then from Wednesday, Thursday, and Friday, 3 days it ended on a negative note. Now this 3 days of fall is considered as a three black crows, which is a bearish pattern, and whenever such kind of pattern happens, market tends to correct from those particular levels. So looking at this pattern, we need to be slightly cautious, but this support of this green candle is 17,774. So I've taken a magical number that 17,771 could be the crucial support for the Nifty. If it breaks, then only further sell-off could be seen. So one need to be cautious, but looking at this last 3 days of fall, a bounce back cannot be ruled out. And again, at higher levels, we might see some sort of pressure also. So next week could be highly volatile, but at the same point, we need to be cautious while going short at these levels. But one needs to look out for the levels of 17,771. If Nifty closes below those levels, then only we might see a further sell-off. So now, looking at this pattern, we feel that yes, the candlestick is weak on the daily charts. We might see some sort of cool off, but looking at the US markets, we might see a positive opening, but positive opening also might bring in some sort of selling pressure at higher levels. But if that selling pressure happens and Nifty manages to sustain 17,771, then we might consider that this could be the bottom of this particular fall. So yes, next week is going to be highly tricky. One needs to be cautious. Do not go short at these levels. Just wait for Nifty to consolidate, and then if it starts moving upside, then only create long positions. So one need to be cautious. So now let us discuss the important supports and resistance level in Nifty for the next week. The crucial support in the Nifty is placed at 17,771 is the first support. Below that, the second support is at 17,637, and below that, the third support is at 17,421. Whereas on the upside, the first resistance is at 18,047. If it breaks, then second resistance is around 18,130, and third resistance is around 18,243. So these are the crucial supports and resistance level in Nifty. Traders should follow these levels and try to trade in the direction of the primary trend of the week. And we are expecting a bounce back from the lower levels. So friends, now let us discuss the Nifty derivatives data. We'll try to figure out what we have observed through the analysis of option data. You will see on the screen Nifty call data. In Nifty calls, you can see the action was seen in 17,900 calls, 18,000 calls, 18,100 calls, and 18,200 calls. Here you can see there has been a rise in the volumes, there has been a rise in the open interest, there has been a significant drop in the option premiums. Implied volatility is in comfort zone between 11.65 to 11.91. This a significant drop in option premium was because that last 3 days we have seen that Nifty has corrected almost more than 400 points. So smart money might have done strong out of the money call writing. So here you can see the data. So on the upside, 18,000, which is the psychological mark, would act as a major resistance. If Nifty crosses 18,000 decisively supported with strong volumes, then we might see Nifty rallying towards the levels of 18,200 and 18,300. So most probably 18,000 could act as a major resistance on the upside from these levels. So friends, now let us discuss what we have observed in Nifty puts. You will see on the screen in Nifty puts, the action was seen in 17,800 puts, 17,700 puts, 17,600 and 17,500 puts. Now here you can see there has been rise in the volumes, rise in the open interest. Implied volatility is between 11.3 and 12.25. And there has been a mixed change, minor change, a minor positive and minor negative change in Nifty puts. So looking at this particular data, we feel that the smart trader might have just been waiting for Nifty to trade decisively, and they might have thought that Nifty might go, or Nifty might give a sharp correction from the higher levels. That is why we have seen a sharp call writing or a heavy call writing in Nifty out of the money calls. But at these levels, we don't see any sign of Nifty put writing. But from these levels, we cannot say that that may not happen. So most probably in the next week from this particular data, we feel that on the downside, as we have discussed, that 17,700 or 17,800 could act as a major support from these levels. So definitely if 17,800 is breached, then only Nifty might slip down to the levels of 17,600. So again, most probably next week range is also 17,700 on the downside and 18,200 on the upside. So definitely on the upside, 18,000 could act as an immediate resistance, and on the downside, 17,700 could act as a major support. So now friends, from this particular analysis of charts and derivative data, we feel that we might see a technical pullback from the lower levels after opening positive on Monday, because Dow Jones has closed on a positive note. After opening positive, we might see selling pressure coming in at the higher levels, but that selling pressure could be absorbed at lower levels too. So we might see support coming in maybe around 17,700 So we need to watch out those particular levels very closely. So one needs to be cautious while going short, or I would suggest do not go short. If anybody is short, try to book profits at the lower levels. Now friends, let us discuss the Bank Nifty charts. On the Bank Nifty charts, we have seen a similar kind of pattern. You can see the rising channel was broken initially in the last week. Bank Nifty traded for positive trend for maybe 7 to 8 weeks, and on Wednesday, Thursday, and Friday, we have seen Bank Nifty correcting from the highs of 43,578, and it ended on a negative note below the rising channel support line. So this is little cautious because it has ended below this rising channel trend line, support trend line, but that doesn't mean that it cannot appears inside this rising channel. It may happen because many times chart gives deceptive moves. That means it can it can confuse you that the prices are going down, but from next week or next trading session it starts moving upside. That could be a bear trap at these levels. So one need to be cautious, and one needs to be vigilant at these levels. So if those who are short in the markets should try to just book profits if there is a further sell-off from these levels. So friends, let us discuss the supports and resistance level from Bank Nifty for the next week. The important support in the Bank Nifty is placed at 41,877 is the first support. The second support is placed at 41,569, and third support is placed at 41,041. These are the important supports in Bank Nifty. On the upside, the first resistance is around 42,685. Second resistance is around 42,961, and third resistance is around 43,137. These are the important supports and resistance level in Bank Nifty. Traders should try to levels and trade in the direction of the primary trend. So friends, now let us discuss the Bank Nifty option data. In Bank Nifty option data, we'll first of all analyze Bank Nifty call option. You can see on the screen, action was seen in 42,500 calls, then 43,000 calls, then 43,500 calls. Now here you can see there has been a rise in the volumes. Open interest is also rising. Implied volatility is between 14.46 and 15.90. It is in comfort zone, but there has been a very sharp drop in the option premium. Last 3 days of a sharp drop in Bank Nifty is clearly indicating that smart money has done a strong call writing of this particular significant level of this particular out of the money strike prices. So looking at this volumes, we feel that on the upside 42,500 could act as a major resistance because there has been a concentration of volume as well as the open interest. If it breaks, then Bank Nifty might go up to or rally up to towards the level of 43,000, because that might bring a short covering rally above 42,500, looking at the concentration of volume, and there has been a significant drop in option premium also. So one need to be cautious. Implied volatility is still in comfort zone, but if there is a further sell-off, then it might go into a danger zone, which might bring in short covering in the Bank Nifty call writing. So friends, now let us discuss what we have observed in Bank Nifty puts. In Bank Nifty puts, the action was seen in 42,000 puts, then 41,500 puts, then 41,000 puts. Now here you can see volumes are rising, open interest is rising, implied volatility is between 14.56 to 16.91. It is still in a comfort zone, but there has been a minor, or what we call a slight positive change in the option premium. So which is clearly indicating that looking at this particular data, we feel that smart money might have think that Bank Nifty might correct further from these levels, but looking at the change in the option premium is not indicating that a further heavy sell-off could be seen. Yes, 42,000 could act as a major support because there is a strong concentration of volumes. If it breaks decisively, then only Bank Nifty might slip or drift down to the levels of 41,500. But most probably, as I see, 42,000 to 41,800 could act as a major support, and from those levels we might see Bank Nifty bouncing back, because last 3 days we have seen a sharp sell-off throughout Nifty and Bank Nifty. But now looking at the overall data of charts of US markets, Nifty, Bank Nifty, and derivatives data, we feel that a bounce back cannot be ruled out from these levels. Yes, we might see a positive opening on Monday in Nifty and Bank Nifty, but initially it might bring selling pressure at the higher levels. But again, at the lower levels also, after opening positive, if there is a correction, that correction could be challenged at the lower levels, because we feel that bulls might come in to defend the lower levels, and we might see a bounce back of the markets from this particular oversold area on the hourly charts. So one needs to be cautious. If anybody is short in the markets, try to book profits and wait for some pattern to develop, and then create long positions at the lower levels. So overall, the market view is book your profits in shorts and try to go long at the lower levels. Just play for a rally towards the levels of maybe 18,000 and 18,200 on the upside, and in Bank Nifty maybe 42,500 and 43,000. So we might see a pullback towards those levels, and then we will and next week we will discuss what are the patterns has been developed on the daily charts, if this rally will continue higher levels, because we are having a union budget in the first week of the maybe February month. So one needs to be cautious while going short from the lower levels. So friends, let us discuss the final segment of our show, which is positional call. I've identified one stock from the name of the stock is GSFC, Gujarat State Fertilizer. Now this stock has been consolidating throughout many months. It has been consolidating in an expanding triangle. You can see that prices are expanding from these levels. Initially it expanded on a very minor note, and then the expansion, you have seen the intensity of the expansion. So this is clearly indicating that stock is poised for a strong upside rally in long run from these levels. Now what is this indicating, or what is this giving in confidence that the stock might rally? I will give you 3 examples. You can see volumes here. Volumes are rising, the price is raised. Again here also the volumes are rising and price is raised. Again here also the volumes are rising and prices also rallied. Now here also you can see in the last 2 months the volume has started rising. That means the smart money has been started accumulating the stock. The price pattern volumes indicators are giving strong signals that stock is poised for an upside rally from these levels. Currently the stock is quoting around 145. Now this is not a stock for trading purpose, it is just for an investment purpose. So swing traders or positional calls or long-term investors can accumulate the stock in the range of 145 and on corrections to 140 for an upside target of 171 to 175 for long-term purpose. So definitely the stock is looking promising. The price volume indicators actions is giving strong indications, strong signals that stock might rally in the long term. So long-term investors can accumulate the stock in range of 145 and on corrections to 140 for an upside target of 173 to 175. So friends, thank you very much for watching the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you.